Hello and welcome to Finextra. I'm Emily Horler and I'm here with Ben Robinson of Temenos. Thanks very much for joining me, Ben.
Thank you.
So tell me a bit more about the Shifting Sands report and what are the key takeaways from it?
So every year Temenos conducts a banking survey, and this is the 8th year that we've done it. So we can track changing trends and changing attitudes over time. And this year we called it Shifting Sands just because we saw so much change year on year. And in terms of key takeaways, I mean, there are obviously lots of interesting takeaways, but one was around regulation. So it's clear that the regulatory burden is diminishing. So if we went back to 2012, our respondents told us that complying with new regulation was their biggest challenge. In 2013 and 2014, it was their second biggest challenge. And this year, it was their third biggest challenge. So clearly, over time, the regulatory burden is easing. And in its place, more and more bankers are talking about digitization, and in particular, the challenges and implications of digitization, especially around customer loyalty, which is now their biggest challenge, and around maintaining profitability, which is their second biggest challenge. And what's interesting also is that they do seem to be alive to this challenge. And we saw a big uptick in terms of expected IT spend in the next 12 months, and also a lot more focus on technology, on talent management, and on data. So they seem to be alive and investing in the right areas.
Did you have any surprising findings?
Yes, I think the most surprising finding was around competition. So, and I think it really encapsulates the extent to which the competitive boundaries are blurring. So 74% of respondents told us that their biggest competitive threat comes from a player that doesn't operate in their industry today. So either new banking entrants or challenger banks or overseas banks or non-traditional banking players like retailers. And in fact, 27% of respondents said that their biggest competitive threat came from technology players like Google or Apple.
And in the report, fewer banks cited fintechs as a major threat. What's your explanation for this?
Last year it was 19% said that fintech startups were their biggest threat. This year it was 14%, and I agree it seems almost counterintuitive because every day we're reading about fintech and we're seeing how much money, VC money, has been put into the sector. Our explanation is that we see that banks can create a kind of collaborative relationship with fintechs, and we think more and more banks are appreciating that. So fintechs are nimble and innovative, and banks have big customer bases and big balance sheets. And if you put the two together, you improve banks' ability to innovate at the same time as you give fintechs a route to market. And so we think collaboration works, and that's actually what we're trying to do with the Temenos Marketplace, which is our app store, which is bring those two communities together.
And only 1% of respondents are running core banking cloud systems. Do you think this will change?
We do think it will change, yeah. So it's true that right now not many banks are prepared to put core processing in the cloud, but we think it will change. One, because simply they can't afford not to over time. They'll have to move to a lower cost per transaction, and particularly if they're going to free up money from kind of maintenance spend to innovation. And secondly, as the number of customer interactions continues to increase, as more and more people make mobile transactions, and we move to the Internet of Things, banks will need this scale that the cloud provides.
And data has been a big discussion this year. Why do you think this is? Banks
appreciate that customer data is one of their best assets. I think they recognize that they have to do more with data. They have to analyze that data and bring insights to their customer, help their customers to make better financial and commercial decisions. And so a lot more bankers this year talked about the need to capitalize on data than last year. But they also said it's not easy. So I think only 9% of banks said that thought that they were using their data effectively today. And they were talking about things like it not being a strategic priority, the data being locked up in silos, the difficulty of finding data scientists, the right talent. So yeah, in short, they recognise it's an asset, but they're struggling to really capitalize on it.
And thank you very much for speaking with us.
Thanks very much.
And thank you for watching.